Bitcoin rejects 70K as Trump's words at Nashville get taken with a pinch of salt. Ethereum disappoints after inflows are lighter than expected, and crypto vols get hammered as ranges remain intact. All this and more in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got Dave back from holiday with a nice tan from FRNT. And today's special guest is Conrad Carvalho of Oaktree and Lion, head of trading over there. Welcome, Conrad. How's it going?
Oh, thank you. Yeah, no, it's good. It's good. I was hoping for a quiet summer.
Yeah, we're definitely getting that.
So it's been hard work still.
Joe,
to continue.
Joe, it's funny. Like I went away obviously for 2 weeks with a family. The weekend before I flew away, Trump got shot. We had obviously Biden.
It's just
drop
ridiculous,
out the
even the fact that you're saying those words, right?
I know.
Yeah.
You know, again, you go away on holiday and you think, oh, it'd be nice just for quite a couple of weeks. It's summer, kids are all on holiday, and a lot's gone on. So I'm looking forward to the conversation.
Totally.
Getting into that.
Yeah, I mean, look, we all knew that Trump was, becoming the pro-crypto candidate, and there was going to be correlation between his odds and the market. But my God, it went into overdrive right after that.
Yeah. And particularly, I think what was interesting, obviously, is the talk around the, Bitcoin being a reserve asset for the US, which is huge. And I describe it as this sort of shift in the Overton window, like just kind of putting that in the public psyche. But
yes, it's not just little El Salvador doing it anymore.
Yeah,
it's the US government.
The US government, and actually we've seen a similar thing floated in Hong Kong as well. Like huge, like the political shift in the head, the political wind shifting is just so big. It's hard to get my head around. And again, all these things aren't going to play out,
next week
soon.
You mean we're not going to 100K next week?
Well, yeah, who knows? But like it's just a massive thing, and obviously a little bit of the wind's been taken out of the sails with now Kamala sort of running and that kind of denting a little bit, I guess.
Although she's apparently wanting to reset relations with the crypto industry, whatever that means, exactly.
And again, I think the important thing, again, big picture stuff, is the fact that the Dems are kind of given up now on this anti-crypto stance. They realise it's a hill not worth dying on. So they're now going, there's, what is it, like 80 million holders of crypto in the US or whatever it is, more holders of crypto than dogs. They know that let's not lose an election because we've got some mindless anti-crypto stance that's not really rooted in anything. So that now we've essentially got the US kind of on board. I think Gensler looks like he's going to be gone, whoever's in charge now. So really, really positive stuff from the political side of things.
But wasn't enough to give us the breakout we wanted, though.
No, but it looked like classic kind of trading, right? 70K is a big level. Obviously, perhaps you'd argue bigger levels at 72, 73K. But we just had a really, really big run up. And we were discussing before we come on, I've come back after 2 weeks and people are like, oh, not much has happened price-wise. We were like 58K when I went away. And now we sat around 66K.
Yeah.
Had a run at 70. But
15% in 2 weeks. That's not enough, man.
Yeah,
Not enough.
And we kind of, we've spoken before about this 60, 70K range, and we still kind of haven't really broken out of that. And we had the flush that you kind of called for, where we got down to around 53K, bounce back into range. So now we're kind of back into range, and it's like, what's going to be the catalyst for us to break out? I still think we look really well supported for that breakout. We've got the Fed tonight, will that be the thing?
No surprise, you're a bull.
Yeah.
But anyway, enough rambling from us.
Yeah.
Tell us, man. So Oaktree and Lion, prop trading and research firm. What are you guys doing over there?
Yeah, so cryptocurrency derivatives, prop trading, and quantitative development or research, or both. We are a UK-based firm, specializing in options and volatility strategies.
Is that your background?
Yeah, so my background. So I started off in equity derivatives and
same as me.
bonds trading in particular, Japanese, European time. So some of the weirdest esoteric quirky, the altcoins of the altcoins of the convertible bond market. But I quit. I soon after moved into energy commodities and spent most of my time
Did you catch
trading
the
that.
big bull market in oil?
Yeah, I started off when oil was something like $20 and went all the way up to 130 and then back down, and all the craziness of multiple sort of market big events occurring, wars and everything. It was particularly exciting, and I was also trading kind of the altcoins of the oil world as well. So some really dangerous stuff.
Electricity
in options.
So crypto is kind of a natural evolution then, really, from that trading background.
There's a lot of things I could apply from that. I mean, there's some very big differences. Maybe I'll just mention it very briefly. So some of the things I used to trade was oil against oil, Brent versus TI. Is a very simple idea. Now they're economically linked. Now you've got BTC versus ETH, and what's the link between there? It's a very different beast, but it's one of these is one of the many things I think about. How can I apply sort of TradFi asset experience onto DeFi, crypto markets? Is one of the big things I think about a lot. I've applied a lot of tools. Lots of advances have been made in the last 10, 20 years in options. There's been a continual development of things like volatility surface models and how you look at things and how the market dynamics affect option pricing, and sort of growing with that and developing that into crypto, which I thought, it was very, very immature market at the beginning, and now it's become this mixture of mature and immature still. Like,
on that point of maturity, I mean, it feels like the sell the news events are increasing because of that maturity, because you have so many people like kind of front running these events, and the vol gets super pumped, and every time it's a vol sell, and usually the spot kind of mean reverts because people are more savvy to it and using optionality to play those things, right?
Yeah, I mean, it's everything I do is market neutral, so I have to try and disconnect what's happening in spot directionally with options, but at the same time, the vol surface is a function of trend and spot. So I do have to. So one of the big things I do is lots of scenario analysis. If I've got a position on risk reversals, I have to kind of look at the different situations. If there's a bull market rally, how's that going to affect vol, and how's that going to affect my risk? And I've got this Varna risk that I've got to worry about, and all these relationships I'm trading, are they going to hold? And they do break, and that's when things get really interesting, because either it's an opportunity or I have to escape and get out pretty quick if I think it's an entrenched change in behavior. So there's lots of these kind of, the way I look at things is very different. Like the way you look at things is brilliant. You have edge from your understanding of the vol surface and volatility, and you play that with your directional views as well, and you have an edge based on views as well.
Yeah, but I agree. Delta is always going to be my predominant greed as a retail trader, basically.
Yeah, and mine's everything. I mean, to a certain extent, I'm generally Vega neutral as well. So it's really the second order and the other kind of dynamics that I'm trading.
So it's like spot vol correlation is a big part of what you're playing, I guess. Yeah,
that's probably my biggest risk. Well, once I've kind of isolated and flattened delta exposure, or I shouldn't say delta, I should say spot risk, because if I'm long vol, then I've got a sort of price goes up, vol goes up, so I've got to protect against that, and so I'm trying to focus on and isolate very specific risks. If I want core skew, I have to wipe out Vega risk, delta, Vega, and everything else, and my biggest component then is spot vol correlation, which I then have to monitor. And this is it's a brilliant one. There is a long sort of long running behavioral pattern, and there's lots of short term bits. So generally it's positive spot vol correlation,
which is why longer dated skew is always for calls, basically, right? Because that structural correlation is kind of there and it's consistent. But then you get these bouts of volatility to the downside. Something I was asking you about earlier, right? It's like if we look at a regression for the last 2-3 years, whatever, you'll see if we ignore the kind of the year where we went down badly, like 22, right? So you'll see that strong spot vol correlation, but then you get these little mini regimes of like a few weeks or a month where we go down and suddenly vol pops on the way down. And is there a way of spotting those ahead of time? Is there something you're monitoring or seeing? Is it a pattern that you see in the flows maybe that are shifting and changing, that are warning you that spot vol correlation is about to flip the other way round and I need to be careful here?
Yeah, so there's two things. So to talk about some of the ideas I trade. So I'll try and trade when spot vol correlation is cheap. And cheap for me is you do a dot plot with price versus vol, and it's below the mean reversion line. And that can be a good thing to buy, but you have to balance that with monitoring historic vol and how realizable vol and kind of forecasting that. So one of the things we've got now is spot vol looks very on one measure it looks very, very cheap. But actually when you look at it against what realizable vol is, it's way too expensive. So you have to balance that view. And that's what makes these relationships break down. So commonly I'll see the spot vol correlation goes negative in the shorter term. How can I try and get in front of that? And the main way I do that is by looking at, I collect 15-minute data of the order books, so I can keep track of things on quite a short time scale. So if I start to see that relationship start ticking like that, then I know that something's up and I need to be careful. And that's probably the main way. I try to be quick by looking at the data on a lower resolution.
You're looking at granular data to see that the correlations are changing on that granular level. Okay.
Because the models, what I see is people sort of reprogram their surface and then things tick in a certain way. And so we can sometimes spot that.
Okay.
The other way is to try and understand market positioning, and that's very difficult. You can't just look at open interest because you don't know whether it's long or short. You can try and look at whether it's a maker or a taker order, but that's still up for debate and opaque. So you kind of have to guess sometimes. I remember end of last year, we got slightly caught out because prices shot up towards the end of 2023, and we got caught out because core skew went down strangely.
As spot was breaking higher. Yeah,
and I think it was because everyone had built up these very long okay. around 50, 75, 45, I think, to 75. Okay. And so, there was suddenly this huge supply of people converting that to futures or spot positions instead. Okay. And so if you knew at the beginning of 2023 you're trading, and we were, you have a good feel for there's market positioning where people are very long these strikes. So that mitigated, some of the issues we had, which was good. So it was a good thing I'd started trading, back then. But it's hard, that data is quite hard. I guess the other issue you've got is, okay, while Deribit has 80-90% of the options market, there's still, OTC bilateral, and there's estimates of like 50, 60, 80% of the market is actually not on exchange. And, having that idea of that flow is quite hard for me because most of what I do is looking at Deribit. I'm using data and these numbers. I'm not, I'm not interacting with traders and hedgers as much.
Yeah, no, it's interesting. Like from my days in FX, and like positioning was always the hardest things like to ascertain, despite the data and what was available then. And actually, so much you could gauge from conversations like with hedge funds and asset managers, and then just like seeing those flows. And again, it was more about like the pattern of flows necessarily than knowing like the totality of flows. And like I used to try and think about that a lot, in so much as a one-off flow was less interesting to me, even if it was big, than if it was you saw a few asset managers or a few hedge funds getting into a trade. And that's now I think the difficult thing with crypto, because I don't think we still don't have the same kind of coverage in terms of sort of sales desks and stuff like that are talking enough to these people. So much of it is now systematic as well, that it's harder to gauge sort of positioning and flows. And for me, from a framework perspective, when I'm thinking direction, at least around sort of crypto, I would say like rates, liquidity, flows, positioning, and the flows and positioning thing are two difficult things that are really hard to kind of really get a very good feel for.
It's also a function of the size of the options market relative to the spot market,
Yeah,
right?
yeah,
So like that, there's gazillions of companies out there who are tracking gamma positioning in S&P, for example, right?
yeah,
Because we're talking about 10, $15 billion of gamma per 1% move on the S&P on a regular basis there, which really impacts the marginal futures trading that goes on in S&P and can really make it gravitate towards strikes into expiry and stuff. Whereas whilst we've got some few GEX models floating around in crypto, the actual volume and size of gamma positions, whether the dealers are long or short, isn't really that impactful relative to the amount of spot volume and futures volume that's trading, like in perps and stuff. Correct me if I'm wrong on this.
In oil, futures and derivatives markets are multiples of spot or physical trading.
Yeah.
In crypto, with single digit percentage of spot is in options. So you don't have that feedback loop that you have in other things. So, options, it's not, people might be super short something. Even if we get down there, it's not going to affect the volatility of spot. It's still going to be driven by the spot's still going to have its own thing. And that should change. I mean, that's one of the big reasons why we're focusing on options, is because the potential for the options market to be, 10, 20, 100 times bigger is interesting.
100%. And also the yields, right? Like the yields you can generate in selling optionality in crypto is miles better than any yields you're going to generate in S&P, for example. Right.
Yeah, we've got to hope that the vol stays high. I mean, structurally, it kind of has to be higher than most TradFi assets. It's
of course.
24-hour market. Its fundamentals are fundamentally different to how other assets are looked at. And when things happen, the price just rebases.
It just gaps.
And this is maybe to go back to a point on the volatility. A few days ago, vol dropped like 4% in the December at the money. And that wasn't really pushed down. It was just suddenly remarked, I think, by whoever was marking,
was that
market
after
makers.
the Trump speech?
Yeah, this was it came off a lot, and then it came off another 4%, 3-4% yesterday or the day before.
Right.
And you have these kind of things that are quite difficult. It's someone's reset their vol surface, and they've just set it lower, and there's minimal liquidity.
And the rest of the market just goes along with it. Basically, it doesn't trade against them.
Yeah, and this is an interesting thing. Maybe I've picked up from one of your tweets or educational things, but it's, as a trader, it's quite difficult to not have your view based on where you see the prices, but to have your own view, and then the price it's just where the market is. Can you use that and exploit that, or is that price going to stay there and it's never going to come back into line? And that's one of the things we try to look at as much as we can.
Yeah, I agree with you. Like the space is growing, right? There's going to be more and more funds who get comfortable, especially with the political narrative changing and becoming more friendly, regulations becoming more friendly. There's going to be more funds popping up with AUM ready to go after this and trade options and generate returns in crypto. So I think you're in a good space. And we're still quite early.
And I don't think that's going to really push down vol too much further. And we're still going to have this big seasonality. Okay, you've got weekends, vol can be under 30%, and then Thursday evenings it can hit 100%. But and then August, potentially could go back down to 20-30% like last year as well. But it's still, the long running average kind of has to stay high, I think. And even if more people come in and there's more liquidity, there's still huge space for that, I think.
I think as well, like when people talk about institutional adoption and like, what negative impact did the FTX blow up have on adoption, I still think one of the biggest impediments to broader adoption and people moving into the space was actually the fact that macro, from a rates volatility perspective, got interesting again with this hike cycle that we witnessed in the US, arguably like the sharpest hike cycle we've had in history. Now that's kind of faded, and we're about to move into cuts. I still have a view that we'll probably be back at zero probably quicker than people think in rates. But now that rate volatility is kind of fading. FX volatility is completely collapsed.
Unbelievable.
I mean, again, we get excited when dollar yen's moving again, but broadly is kind of really really fallen from where it was back in 22. Now it's like, right, well, how are we going to make money? And that's when, again, I think people will keep looking at, that's where the volatility is. That's where the money's going to get made. And I think we'll see, particularly hedge funds and the like, start to move into this, because, I mean, I'm not sure if I can say the fund, but it's public news. But a big hedge fund that's big in the space, all their returns right now are coming from crypto. Okay. And the more you see,
I could hazard a guess who that might be, but I'm not going to.
Yeah, but the more we see, macro hedge funds, go back to like single digit returns, and meanwhile the crypto boys are all and girls are all hitting double digit returns. Everyone starts moving in this space again. So I think again we're at a really interesting sort of period.
But, I mean, we are structurally seeing declines in vol over time, right? Like you look at a long-term chart, all the spikes are getting shallower, right? So a spike used to be 150 vol, now it's like 80 vol basically, right? And the speed at which it goes back down is getting shorter as well, right? So there are players who are just waiting for the vol spikes to launch into, right? Arguably, I might be one of them as well, and I'm sure you are too.
Yeah.
So.
I think one of the difficulties is 24-hour markets. There's a lot of time the price doesn't. The distribution on crypto price returns is completely different to any other market. It's long periods of doing nothing. Last year, July, August, it just deadlined and then had some big moves. It had a big move deadlined. And that's difficult. That's hard work, but that's hopefully going to keep the baseline or the long-term trend for vol to stay up, which is good.
It's good if you're a seller of that stuff, and rolling it down the surface. Right.
Yeah. So that's one of the other things to do. So maybe I should talk about how we look at trade ideas on the vol surface. So I have 5 broad sub strategies. One is yield. So we look at the futures yield and we trade that and we leverage it up where we can in both ways, in both directions. Vol premium, we look at term structure and skew.
You say vol premium to realized?
Yeah.
Right.
And term structure, skew, and relative value. So this is BTC versus ETH. So we look at all those other strategies, but on a relative basis. And we try to have positions on all of that. So one of the good things is there are times when there's great opportunities and there's times when it's relatively quiet across all of them. So sometimes, like right now, I haven't got much on because I'm waiting for more visibility on sort of macro events to give me better visibility on scenarios going forward. But generally, you can have quite diversified and uncorrelated positions in each of those strategies. One thing we've got to solve is just trading on more granularity. So at the moment, we're trying to capture the bigger moves, and that's worked well. But we can do a lot more, and that's one of the things that makes crypto interesting. There's lots and lots more angles for making money, and when you bring in DeFi strategies. You can do liquidity farming, restaking. There's lots and lots of different angles where, if there's nothing going on in vol premium, if it's too low, then you can find something in the DeFi space. And I think that's what makes it an amazing thing for a hedge fund that can build up capabilities across the whole of the crypto market space. There's always an opportunity to make really good yields.
So you say you've not got too much on at the moment risk wise. Obviously, big event week, Fed tonight.
Yeah, I was going to say, do you want to give us your sort of, in a nutshell, macro risks to be aware of for the next week or two?
Yeah, I mean, obviously, before we come here today, we had the Bank of Japan. That still is an ongoing risk. Hiked rates, which was kind of telegraphed before. So they've.
But dollar yen reacted lower on it still. Right.
Yeah, I mean, dollar yen bounce and then back. I guess the dovish element to it was that they didn't taper QE as aggressively as some were thinking. So I think they've reduced purchases JGB purchases by around 400 billion a month. Some will look less yen, some are looking for $1 trillion. So the taper of QE and bond purchases isn't as large as it was, but you know, clearly there's been a trend change in terms of the dollar yen. With now, you know, you've got this divergence trade, where you had essentially the rest of the world were kind of, you know, in cutting mode, or certainly the economy was sort of weak, and the US were still had this resilience in the data. We're now moving into the Fed cuts. The data in the US, I'd say on the whole, has been pretty soft. Yes, we keep getting these, you know, GDP was sort of pretty strong, but I think from the inflation side, we're back in this disinflation trend. The labour market continues to show signs of weakness. We had the JOLTS survey yesterday.
But do you see tonight's Fed as being like a big event in terms? Is the market going to learn much new from this FOMC?
No, I don't think so. In that, I'm expecting them to nail on the September cut.
I think everyone thinks that. Yeah. I
was saying on Twitter earlier, we'll spend the next day or two debating whether they dovish, hawkish. I don't think it matters. The fact is, we've ended the rate hike cycle. We're now moving into cuts. I've described us as being in this for quite a while now, this macro purgatory, because we thought we were going to have 7 cuts this year, and then they kept getting pushed out. Well, the cuts are finally here, and I do think like that's kind of quite a big shift for this market once the actual cuts start arriving. I think we're probably underpriced for cuts, you know, further out. Very rarely do you see a Fed cycle that just goes very slow with cuts. They normally start to come. The labour market normally starts to deteriorate more quickly than we think.
So do you think the non-farm payrolls data is more important than the FOMC?
Yeah, I do. Yeah, right. Because it will start to reset how people see it. I mean, unless, you know, Powell's going to, you know, just tread the kind of, you know, the careful line, lead into the cuts, but also be data dependent and not want market building in too much beyond that. And that's why everyone will be debating, well, I thought that bit was dovish and that bit was hawkish. So I don't think we learn much tonight other than, you know, kind of nailing on the September cuts. The data is right. We're so data dependent right now on everything. So non-farm payrolls is probably a bigger deal.
Even bigger than CPI maybe on the 14th, do you think?
Yeah, potentially. Because
CPI is kind of in that trend down now.
Yeah, it's kind of just ticking down nicely. It's probably, it's still a little bit stickier around here, but going in the right direction.
Mm-hmm.
But if you look at Trueflation data,
who we are bringing on the show.
We are bringing on the show, yeah.
At some point.
That's showing a real pickup in the disinflationary trend.
Oh, is it?
And yeah, I mean, we'll be speaking to them, but I think their data is about 3 to 6 months ahead of what you start to see in the data from the, you know, the official data from the US. So we're seeing that disinflationary trend reassert itself. The labour market looks like it's deteriorating. I think if you saw a pick up another sort of jump in the unemployment rate, then I think that's going to be a quite a big moment for the market in terms of going, we have to reprice the Fed.
And if they reprice the Fed, do risk assets rally on that? Like, I'm kind of wondering now, right? Because risk assets starting to look a little bit nervous down here. Tech's getting unwound a bit. We're hitting key levels on the S&P. It's like, you know, up until now, it's been like weak jobs data is good for the market because they're going to price in more cuts and risk assets love it. But are we at an inflection point in equities where bad jobs data actually is taken badly? I don't know.
Yeah, I still think we're a function of rates and liquidity. The pushback I get against that is historically when the Fed have started cutting rates, like equities have actually tanked. But I think that was in a pre-08 world where actually equities were more of a function of the real economy. Mm-hmm. So normally when the Fed were cutting rates, it's because we were going into recession and all that. And
it was like confirmation that we were in a bad shape.
Now we're about rates and liquidity. So the way this normally plays out, we get a bad print on Friday. The knee jerk is actually risk sells off because everyone goes, oh shit, it's like recession and that's like the knee jerk reaction. But then like the rates liquidity angle reasserts itself and then we rip to new highs. Hence in the middle of lockdown in 2020, when we had the arguably the deepest post-war recession that we've seen. We hit record highs in the S&P. So I kind of think, and even looking at the last couple of weeks, Japan and the carry unwind is a risk, but I think US rates breaking down, which is starting to break down, is a bigger deal. A dollar breakdown would be a bigger deal. China as well, post third plenum, they've started to step up stimulus. Still not like pumping it like still been a little bit more cautious, but they cut rates.
I'm still waiting for my China calls to actually make me any money.
yeah.
They're really not doing a good job.
But so look, China's stepping up stimulus, even if it's not as quick as some would like to see. And China as well is emitting this disinflationary pulse across the world. So I definitely think the inflation thing's done.
Mm-hmm.
I think there's a limit to how far the Bank of Japan can go with normalizing rates. Partly as well, their economy, other than the inflation side, their economy is not doing well either. Fed are cutting, liquidity's picking up. So I don't think it's a bad risk environment. I think we've had a bit of a correction, maybe on some of this like worries about this carry unwind, and also a trend in tech that perhaps just got a bit overextended. But
yeah, Nvidia's had a decent correction.
Yeah. So we're now probably at levels where people missed it are probably sniffing to sort of come back in.
Mm-hmm.
And again, it's just it's a big moment, the fact that the Fed are sort of moving. I think as that relates to Bitcoin and crypto, I think we look well positioned for the next leg higher. So we've been in this macro purgatory that's kept us in this range bound. That's now starting to shift.
Mm-hmm.
Fed are cutting rates. Liquidity is coming in both from the Fed, from China, and the sort of political winds have shifted as well. So I think we're ready to take that next leg higher. Timing that is always difficult.
Mm-hmm.
You kind of typically not want to be in this position in August when it's typically quiet, but that might also lend to sort of lower levels of liquidity that actually, we could be here next week and we're breaking new highs at 75k and everyone's getting excited again. So yeah, I think things look good. The macro is developing towards where we kind of been tracking, I guess, for most of the year.
Conrad, on the vol side, you mentioned you've been short vol. Well played. We obviously got off 25 vol collapse in the front end. That's pretty decent. Would you remain short vol here, or have you covered your shorts and waiting for the next opportunity?
Yeah, I mean, I mostly covered it. I mean, I've kept a small amount just to give me something to do. And look at what happened last year. Vols, kept going. There was a handful of big moves, but which you could ride out.
But when the curve collapses into contango like this, do you prefer to be short the front because the contango is telling you that realized vol is going to continue to stay low, or do you prefer to be sort of short the midterm and play a bit of roll down with it?
I mid to long term. So
okay.
I don't do very much right at the front. It's mostly at least 30 days.
Okay.
Most of my position was like December. Had the money and
a load of calls got sold back to the market in the 100k strike area, right, in deck. So that would have helped your position.
Yeah. So trying to sort of reassess what the market positioning is at the moment. Going forward, what do we think? Is there going to be low liquidity in August, and does that mean the market's going to be more dead and nothing's going to happen, or does it mean that small trades are going to push things all over the place?
Mm-hmm.
So there's some interesting ideas. Maybe you don't want to buy options, but you want to have some sort of very, not wingy, but far out bids and offers that might capture some of these big moves, because often they snap back pretty quick.
Mm-hmm.
So that's one thing we're sort of trying to think about. Maybe one idea I'm starting to think about is strangles. Strangles on the 25 delta December
owning them
are cheap,
okay,
but I would put them on a Vega neutral.
So
butterfly, yeah.
Okay.
So sort of semi-butterfly. I think you need like 80% against 100% on the 25 delta in terms of Bitcoin. December, yeah. What I like about December so one of the things I have to look at is how much bang for my buck can I get for the initial margin? Because some of my positions get a bit complicated and they can be quite initial margin intensive. So what parts of the vol surface give you the most bang for your buck? And that's kind of around the 25 delta and as far back as you can go generally. And then you have issues with liquidity. March and June is a bit tougher to trade around. December's nice. It's got a lot of volume,
part of
a lot of open interest as well.
It's been around a while, that December maturity now, right?
Yeah. So that's something I'm looking at. I just got to balance, what do I think spot vol correlation is going to do if we spike up?
ETH relative value, like you mentioned, that's a big thing you look at. I mean, I look at that a lot as well. Obviously, it came down quite a bit as it priced out the ETF launch, but then we did realize quite well last week on a relative basis, so it's popped again. So where do you think that spread lives, right? Because it used to live at 15, 20, maybe it used to live at 10 to 15. Then you had Bitcoin narrative, ETFs coming, and the thing just collapsed, right? And we were Bitcoin over for a while. But now we're going back towards a more normal world, it feels like. We're in that 5 to 10 range on ETH. Do you think we're back where we're supposed to live? Or do you think this thing goes down again as Bitcoin re-steals the narrative, particularly on the political spectrum?
Yeah, no, I have this big debate in my head about what's the connection between BTC and ETH. They're both crypto assets, but they're both fundamentally different as well. And they capture two different kind of markets. And there isn't really an economic tie between, you can't convert ETH to BTC like you can take a barrel of Brent crude and ship it to the US, and you have some connection then with WTI. You don't have that. So you're going to expect wild moves between that. I mean, I was looking at, June, August, December, and that vol diff was as high as 14%, and then it came off, and we caught the right side of that, thankfully, as well. Long term, I think from the data, roughly around 5%.
You think ETH over 5%?
Yeah. But the dynamics are changing quite a lot, and with this ETF, you have to keep watching the flows. When Grayscale finishes selling, how's it going to look? And there's been a steady sort of increase from the other ETFs.
I think yesterday we had the first net inflow into the ETH ETFs.
Right.
So I think that's quite interesting. I think as well, like the other thing for me is obviously Grayscale's impacted hugely, as it did with the Bitcoin stuff, but it's still been a really successful ETF launch again. Lots of volume and trading in it. And
less speculation this time around, it seems, though, right?
Yeah.
People weren't as optimistic about what ETH was going to do on the back end.
Yeah. But I think again, it's there's been some sort of huge flows into the new ETFs. And obviously that's being offset by Grayscale right now. So given that we had the first positive inflow yesterday, we start to see that. I think that becomes a bigger story. And then I also, I think Bitcoin's dominated over the last year because we've had the political side of things. We've had geopolitics, and it was kind of like the big kind of macro story, if you like. As liquidity picks up, and it becomes more of a liquidity story, and we've been sidelined on global liquidity for about 3 months now. It looks like it's starting to pick up.
Cross-border capital mentioned that. Right?
Yeah. I mean, those guys are great, right, in terms of tracking that. And so now we're kind of starting to pick up. Liquidity story becomes an altcoin play. That's when alts start to pump. And obviously ETH.
Altseason's coming, people.
Yeah, I think so. So, and with this added overlay of the ETH ETF, which I do think is actually going pretty well. I think we've been saying this for a while, and it's just timing it. But I think ETH looks again.
Have we got a Solana ETF coming on the cards though?
I don't know. Didn't BlackRock say no for now?
I don't know.
I think BlackRock will lead the way on that.
Okay.
I think from a market cap and depth and all that sort of stuff. But ultimately, it's a case of when rather than if. But the when seems. And it's been
doing quite well from a price action perspective.
Yeah.
I mean that narrative about the celeb meme coins dropping 99% and things like that. It's quite difficult. I mean, you've got a huge amount of unlocks coming in August, right? So that could be, I guess, an opportunity. Maybe brings an opportunity
the dip in alt
to get into it.
Oh, and we say I don't really mess around in the meme coins. I bought my first meme coin for a while when I was going on holiday.
Which one?
The ear stays on.
Oh my God.
It literally, as soon as I think about someone launched the year stays on,
Oh my gosh.
I think I've lost around 80%.
Yeah, but that was to be expected.
It was like,
Yeah,
I thought I was going to pay for my holiday. It was just my little lottery ticket. Fortunately, I didn't pay much.
Yeah, it's interesting now. It feels like investing has become a bit more. It's not just let's make more money. It's a bit of fun, with the Wall Street bets and still DTEs and all that kind of stuff.
That's because it's becoming a lot more about community, right? When you invest in a meme coin, you feel like you're part of that community of people trying to pump that meme coin, basically, right? And even me, right, in my business, Options Insight, and other businesses similar to me, we're all about building trading communities. So there's camaraderie between a group of traders because we aren't sitting in the same room on a trading floor like I used to do when I was working for a bank, right? We're all sitting in our own places, trading this stuff by ourselves, and that can be a lonely place. So you find a way to kind of be in a community with other like-minded people looking at the same stuff, then it makes you more excited about those trades and those investments.
Do you know what makes me laugh as well? Like some of the snobbery you get from like the TradFi, community, and former colleagues and stuff, like when you're in crypto, and like some of them can take themselves quite seriously. And then they say, oh, you're only really in crypto and Bitcoin and everything because you just think it's going up. And I'm like, it's probably really what you're all doing, really. I don't know too many that along. I know Amazon stock with, I really understand the finances of the company. It's like, do you know what? I think it's going up, and making a call on that. But we'll just like my wife always sort of laughs at what I've done for years because it's like you're basically just all chasing numbers around a screen. Like
I always used to say trading at a bank was like playing a computer game.
Yeah, completely.
You're trading hundreds of millions of dollars of stuff, but if you start to really comprehend what the value of that is, I mean, it'll drive you crazy, right? So you end up compartmentalizing and just kind of ignoring that and just trading like it's a game, basically.
But which makes me feel like it should be more fun than what it is, and
yes.
I like the fact that crypto has brought a little bit of fun to it all, and
totally
as well as opportunity.
On that note, I think we'll wrap up this week's episode. I mean, it was good to catch up. Good, glad you had a good holiday. I actually managed to get a week off myself last week, which was good. And pleasure to have you on the show, Conrad. Thanks for coming on. Giving us your insight.
You invited me.
Amazing insights around the vol surface and stuff. So anyway, I hope you enjoyed the episode. Make sure like and subscribe so you get notifications for this sort of content, and we'll catch you all back here next week. Cheers.